In an era of upheaval for the global automotive industry where the fates of companies are intertwined with geopolitical games, Tesla, the world's leading electric vehicle manufacturer, has found itself at the epicenter of a storm. Canada, whose automotive industry with exports of $51 billion is the second largest, has faced a crisis, while Mark Carney is campaigning in the heart of the Canadian automotive sector, Windsor. In response to tariffs imposed by U.S. President Donald Trump, the Canadian government decided to exclude Tesla from the country's electric vehicle incentive programs. Moreover, rebate payments for Tesla were frozen until each application was individually investigated. This shocking multi-million-dollar move caused a stir at Tesla, calling into question the company's future prospects in Canada. The Canadian incident with Tesla casts a shadow over the company's prospects in North America, raising concerns among shareholders and questioning its further development. However, there is much more to this conflict than just a disagreement between an automaker and the government. Global production networks, competition between the US and China, European standards for electric vehicles, and the overall state of the automotive industry all play a role in the unfolding crisis. How did one of the world's leading electric vehicle market leaders end up at the epicenter of international tensions? What decisions led to Tesla's exclusion from the Canadian electric vehicle incentive program? And how might potential new tariffs from the Trump administration affect the North American automotive market? The global community is closely monitoring developments, trying to understand what options remain for Tesla and how global trade wars could affect the entire industry. Let's try to understand the background of Tesla's Canadian crisis and find answers to these questions. Tesla is an American company led by Elon Musk, not only a tech billionaire but also an influential advisor to Trump. This electric vehicle industry giant was the first in the world to introduce electric vehicles to the general public and has largely defined the development of this sector. However, in its pursuit of innovation and leadership, Tesla often finds itself at the epicenter of disputes with government regulators. The recent conflict with the Canadian government is a clear confirmation of this. Billions of dollars invested in the Canadian electric vehicle incentive program, funded by taxpayers, combined with the active political stance of Tesla CEO Elon Musk and new U.S. tariffs on Canadian goods, have led to a hardening of the country's position towards the company. The Canadian government not only stripped Tesla of the ability to receive any subsidies but also cancelled a previously granted discount of $43 million. Canadian Prime Minister Mark Carney, calling President Donald Trump's automotive tariffs against Canada a direct aggression, convened an emergency cabinet meeting. President Trump has announced 25% tariffs against our automotive industry, and this is quite obviously a direct attack, he said. On Thursday, March 27, he wrote on social media, "I have convened Canada's National Cabinet Committee, and we are taking steps to counter President Trump's attacks on our workers and industry." Carney expressed confidence in the ability to overcome current difficulties and create a more powerful and sustainable economic system. The turning point was Tesla's massive application filed immediately after Canada announced the imminent exhaustion of the budget for the Incentives for Zero-Emission Vehicles (IZEV) program. The request for a substantial amount of 43.1 million Canadian dollars, equivalent to $30 million in subsidies, could not fail to attract the close attention of government officials. Moreover, it is alleged that Tesla sold 8,753 vehicles in just one weekend, with sales being made through 4 Canadian dealerships. Amazingly, this means that a car was sold on average every 30 seconds. The Canadian Automobile Dealers Association expressed doubts about the realism of such figures, suggesting the possibility of manipulation of the system. In response, Transport Minister Chrystia Freeland initiated an investigation and suspended all payments under the program. This decision was a serious blow to Tesla's financial plans and led to an escalation of trade tensions between the United States and Canada. However, there is more to this incident than just a trade conflict: Tesla's aggressive sales promotion strategy. Recently, Tesla has taken a number of steps that indicate a desire to maximize government incentives designed to support electric vehicles in Canada. The recent surge in applications for these incentives, skyrocketing from 300 to an impressive 5,800 in a short period, has raised concerns within the Canadian government. Authorities have interpreted this as an attempt to manipulate the system and have decided to exclude Tesla from the electric vehicle incentive program. It's worth noting that this isn't the first instance of Tesla resorting to such methods to benefit from government support programs. In 2019, at the dawn of the IZEV program, the Tesla Model 3 needed to meet the set price limit of 45,000 Canadian dollars to qualify for participation. However, at that time, the Tesla Model 3 SR Plus, offered by the company in the Canadian market, was sold at 52,000 Canadian dollars. As a workaround, Tesla artificially created a compliance model with a price tag of 44,999 Canadian dollars. This model was essentially a stripped-down version of the Model 3, offering an extremely limited range of only 151 kilometers. Despite the fact that such characteristics clearly did not meet Tesla's standards, this move allowed the company to access millions of dollars in IZEV incentives. Thus, Canadian taxpayers unwittingly became sponsors of Tesla vehicle purchases, allocating approximately 115 million Canadian dollars for this purpose. This situation raises questions about the fairness and effectiveness of government incentive programs, as well as the role of companies in using these programs for their own benefit. Since 2019, Tesla has established itself as the leader in the amount of government incentives received in the electric vehicle industry, accumulating a substantial sum of 713 million Canadian dollars. However, such active use of support measures did not go unnoticed and attracted the close attention of Canadian authorities, becoming the starting point for an investigation. In this regard, a legitimate question arises about the true motives behind the actions of the Donald Trump administration. How is it planned to transform the U.S. economic landscape through the introduction of new customs duties? On Wednesday, March 26, U.S. President Donald Trump announced the imposition of a 25% tariff on imported automobiles. Emphasizing the irreversibility of this decision, he once again demonstrated the firmness of his intentions in the field of trade policy. However, Trump did not limit himself to announcing new tariffs. He made it clear that if the European Union cooperated with Canada, even larger-scale punitive sanctions could be imposed on these countries. What is behind such tactics? According to Trump himself, the ultimate goal is to stimulate domestic production of American cars and reduce U.S. dependence on foreign suppliers of components. At the same time, economists and industry experts express concerns about the possible negative consequences of such measures. In particular, suggestions are being made that the introduction of tariffs could lead to higher car prices, reduced competitiveness of American manufacturers, and ultimately to slower economic growth. The Trump administration, seeking to bring production back to the United States, is betting on tariffs, but this policy could backfire on American automakers. Even legendary brands such as General Motors and Ford depend on the import of components, and new duties risk driving up their costs. As a result, company profits may decline and sales may slow down. Manufacturers deeply integrated into global supply chains, including Tesla, may face the need to raise prices to compensate for rising costs. This, in turn, will reduce their competitiveness and hit consumers' wallets. According to the administration's plans, the new tariffs are scheduled to take effect on April 3, which could provoke an escalation of trade wars and seriously undermine the U.S. position in the global automotive market. Thus, Trump's desire for short-term production growth in the United States may trigger a chain of events that, in the long term, will become a serious challenge for American automotive giants and the global trading system. So, how is the fate of Tesla shares shaping up in light of the latest turbulent events? The company is going through a period of serious trials, facing a simultaneous fall in both market value and overall sales worldwide. Economic storms and political barriers erected in Canada, Europe, and the United States directly affect Tesla's financial performance. In recent weeks, the company's shares have been showing unprecedented volatility, as if trying to find a foothold in shaky ground. For example, on March 25, 2025, an impressive 12% jump in share value was recorded, the most significant increase in recent times, giving investors a faint hope for the better. Despite this brief surge of optimism, the overall picture remains concerning. The stock is still trading 44% below its all-time high reached in December. A significant blow to Tesla's position in the stock market was the Canadian government's decision to exclude the company's electric vehicles from incentive programs. This move was a painful jab for investors, triggering an immediate 5.6% drop in shares to $272.06. The breach of critical technical levels caused a chain reaction, leading to a substantial decrease in Tesla's market capitalization. Amid global trade tensions, Tesla's stock continues its unpredictable dance, soaring and plummeting as if mirroring the turbulence of the global economy. Meanwhile, dark clouds are gathering on the European horizon for Tesla as sales of the company's electric vehicles show a worrying downward trend. In the first months of 2025, the European market turned away from Elon Musk's brainchild. January and February registration figures for new cars plummeted by 47.1%, totaling only 11,743 units. This collapsed Tesla's share of the European market from 2.5% to a modest 1.4%. This decline is not only due to economic factors but also the political climate. Elon Musk's outrageous antics and scandalous statements have caused a wave of indignation across Europe. His open support for the far-right Alternative for Germany party and interference in British politics have dealt a serious blow to Tesla's reputation in the eyes of European consumers. In addition, the onslaught of Chinese electric vehicle manufacturers with their aggressive pricing policies and the emergence of new models from European brands are questioning Tesla's competitiveness. The tightening of environmental standards in the EU and the prospect of introducing additional taxes on imports from China further complicate the company's strategy in the region. Caught in the epicenter of the European storm, Tesla must take decisive steps to stay afloat and maintain its position in this strategically important market. The company needs innovative solutions and a revised strategy to regain the trust of European consumers and adapt to the new realities. While the American market is seeing a decline in interest in Tesla electric vehicles, the global balance of power is undergoing noticeable changes. In 2024, Tesla's sales in the U.S. fell noticeably, but the company's global figures remained almost unchanged. January statistics recorded an 11% drop in the number of newly registered Teslas, while competitors, on the contrary, showed growth. The Model 3, Model X, and Model S were the most vulnerable in the face of the decline. According to reports for 2024, Model 3 sales decreased by 17.4%, reaching 189,900 units. The Model X showed a decrease of 19.8% with a result of 1,955 units. The drop in Model S sales was even more significant, 31.2% to 12,426 units. The only exception was the Model Y, which managed to maintain relatively stable performance. Despite the difficulties in the U.S., Tesla was able to achieve significant success with the Cybertruck as well as maintain a strong position on the international stage. In 2024, the company delivered a total of 1.79 million vehicles, which is only slightly less than the previous year's result of 1.81 million. These figures indicate that international markets are successfully compensating for the losses incurred in the United States. Despite some decline in sales in the United States, Tesla retains its position as the world leader in the electric vehicle industry. Analysts predict that by 2025, the company will not only be able to regain lost ground in the American market, but also significantly strengthen it through the release of new models. The question of how to assess the current situation for Tesla as a risk or as an opportunity remains open. Fluctuations in the company's stock price reflect the mixed feelings of investors who are concerned about Tesla's prospects. However, there are also those who see the current downturn as an opportunity for profitable long-term investments. Tesla's leadership in the electric vehicle sector and its significant investments in the development of autonomous driving technologies serve as a basis for optimistic forecasts. Many experts believe that the company has sufficient potential for successful recovery and further growth. At the same time, risk factors cannot be ignored. Elon Musk's distinctive management style, his unpredictable political statements, and aggressive pricing policy create an atmosphere of uncertainty around the company's future. In addition, competition is intensifying from Chinese electric vehicle manufacturers such as BYD, XPeng, and NIO. These companies, offering more affordable models, are actively conquering markets in Europe and North America, which creates additional pressure on Tesla and indicates increased global competition in the industry. In the coming years, Tesla will face significant challenges stemming not only from technological and manufacturing aspects but also from a complex political and economic environment. Government policies and global trends in the automotive industry will be crucial factors in the company's future development. In this regard, statements from world leaders reflecting their concerns about the current situation are particularly noteworthy. Brazilian President Luiz Inácio Lula da Silva has sharply criticized the trade policies of the United States, noting that free trade is under threat and multilateral relations are weakening. which will inevitably have a negative impact on global trade. European Commission President Ursula von der Leyen has also expressed regret over decisions made in the US, emphasizing that the European Union intends to protect the interests of its consumers and businesses. In turn, President of the German Association of the Automotive Industry (VDA), Hildegard Müller, stated that the introduction of tariffs would put pressure not only on manufacturers but also on all links in the global supply chain, which could lead to unpredictable consequences for the entire industry. The decision made across the ocean is fraught with adverse consequences for consumers, primarily in North America. These consequences could slow growth and undermine the economic well-being of many countries. In this context, German Economy Minister Robert Habeck emphasized the need for full support of the European Commission in the upcoming negotiations. In his opinion, a constructive approach should be taken to avoid escalating a tariff war with the United States. After all, tariff barriers will ultimately harm both the American and European economies as well as global trade as a whole. Not only political leaders and economists but also all participants in global trade are closely monitoring the actions of the United States. Meanwhile, in Canada, the attitude towards Tesla products has caused widespread public outcry. A wave of protests and acts of vandalism against the company's dealerships has swept across the country. In Ontario, perpetrators damaged more than 80 Tesla vehicles by slashing tires and scratching bodies. In Montreal, protesters threw paint on the facade of a dealership and then staged a sit-in in front of the building. These protests were triggered by Elon Musk's support for Donald Trump, whose policies contradict Canada's course, which is focused on the development of domestic production. At the same time, Canada sees Tesla not just as an automaker but as part of a broader strategy to protect the national economy, which explains the company's exclusion from government support programs for electric vehicles. What awaits Tesla in the future? Possible scenarios deserve special attention. The company may try to challenge the decision of the Canadian authorities in court, citing international trade norms which, according to Tesla, make such an exclusion an unfair practice. However, the Canadian government seems to be taking a firm stance on this issue, and the prospects for a favorable outcome for Tesla in the near future seem very dim. In this situation, Tesla will likely revise its production and marketing strategies. A restructuring of the supply chain in North America is possible, as well as attempts to establish a more constructive dialogue with the Canadian government. It is possible that the company will make efforts to regain lost ground in the markets of China and Europe using a more aggressive pricing policy. The strategy chosen by Tesla will be decisive for its future in the global market. Lowering prices to compete with Chinese manufacturers could negatively impact the company's profitability and lead to financial difficulties. However, the company still has another way to strengthen its position in the premium segment of electric vehicles, where the Tesla brand is traditionally strong. These events are becoming a turning point that could determine not only the future of Tesla in Canada but also the face of the global automotive industry in the context of escalating trade wars. Tesla's ability to skillfully build its strategy and relationships with the Canadian government will largely determine its future fate and place in the global market. In the near future, we will witness the development of events in the Tesla Canada-USA triangle and see the American side's reaction to what is happening. Will Tesla be able to overcome this crisis, or is the company's golden age coming to an end? We will find out the answer to this question very soon.